I get paid hundreds of dollars every single month for doing absolutely nothing with one simple investment called dividend stocks. Imagine there are tens of thousands of people, hundreds of thousands of people who just sit back and collect checks from dozens of companies, like a paycheck, every single month. And yes, it's that simple, and it's my favorite way to invest money. So today, I'm going to share with you 3 great reasons why you should be investing in dividend stocks and why I invest in them too. Also, if you're not subscribed to the channel, my name is Michael, and it would mean a lot if you could subscribe. With that being said, let's begin. Before we get into why I invest in dividend stocks, let's first go over what they are and how they work. Basically, dividend stocks are when you get paid for owning stock in large companies that are generating so much extra cash that they pay it out to their shareholders, either quarterly, semi-annually, or annually. The companies pay you for owning stock in their company. And you may be thinking, well, why do they do that? Well, companies that are growing at a very fast rate typically don't pay a dividend because they want to reinvest their profits and their earnings back into the company for growth. But for more mature and stable companies, they typically pay a dividend because they don't have a better place to invest that money for growth. So they simply pay it back to their shareholders, and if you own stock in the company, you'll receive checks from them, either quarterly, semi-annually, or annually. The steady income associated with dividend-paying stocks is really attractive to many investors, and is a reason why many people buy those stocks in the first place. So, with the basics down, let's get into the 3 reasons why I invest in dividend stocks. Number 1 is it reduces risk and volatility. Dividends are a major factor in reducing the risk of your portfolio because dividends can cancel out some losses in the stock price. For example, if your stock goes down by 3%, you still can get paid a dividend of 3% and it'll cancel out the losses. Also, dividend-paying stocks are typically mature, stable, blue-chip companies that aren't as volatile. These types of companies have predictable cash flows, and because they aren't as volatile as the overall market, they're very attractive to investors, which actually helps support long-term growth and increase in price in the stock price. Another reason they reduce risk and volatility is that these stocks generally outperform the market during a downturn. Typically, during a downturn, when the stock market is declining, stocks will follow that trend and also lose value. But these companies, since they're mature and stable and pay out a dividend, typically they do not lose their value as much, which is very important for investors. Because think about it, these companies will be more stable when the market crashes or it's in a downturn, and you're still getting paid your dividends. So you're still making money even if the stock doesn't go up in value, which is very important because it's almost like still getting a 3% return if this company pays a 3% dividend. Number 2 is they provide a consistent and steady stream of income. People typically think of income investing with bonds and CDs, but these pay a very low percentage each year. With dividend stocks, they can pay upwards of 5%, and you can be collecting 5% on your investment every single year, which you would never see with a bond or with a CD. In addition to providing that steady stream of income, dividend stocks can also increase in value, just the stock price. So that means you have 2 ways to make money with your dividend stocks. You make money from the dividend payments alone, and you also can make money as the stock price increases, just like any other regular stock. Now, each company pays a different dividend. So some companies might pay 5% a year, some might pay 1% a year. It all depends on the company. But the way that they measure it is with something called the dividend yield. And the way you calculate the dividend yield is you take the annual dividend per share and divide that by the per share price. So, let's say you have a stock that is $100 per share, and they pay a dividend of $5 per year. The dividend yield, you would simply take the $5 and divide it by the $100, and you get 5% for your dividend yield. When I invest, I like to look for companies that pay a high dividend yield, because if they pay high dividend yield, you're guaranteed to make a higher return on your investment that year. You know, the stock price might not go up as high as a growth stock, but you're at least guaranteed a consistent stream of income. And there are a couple things you can do with that. What I like to do is I just reinvest it back into the stocks. So if I get a dividend payment from Coca-Cola, I'll reinvest that back into Coca-Cola. So then it's able to increase my investment at a faster rate. And that's called a dividend reinvestment plan. Some companies offer this dividend reinvestment plan, and it allows you to automatically put your dividend payments back into the stock. So you don't have to ever worry about anything, and they'll do it automatically for you. Some people don't like this because then they don't know their exact initial investment and they want to be able to reinvest those dividend payments elsewhere into other companies. But I think for some companies it can be beneficial because it automates the process and you don't have to worry about anything. Number 3 is the dividend tax rate. And taxes can take a huge chunk out of your profits with anything. So it is very beneficial that a lot of companies offer a special tax rate for their dividends known as the qualified dividend rate. Rather than pay your normal income tax rate on your dividend income, you can pay your special qualified dividend rate. And the way that this rate works is it's either 0, 15, or 20% depending on what your normal income tax rate is. Either way, this rate is going to be lower than your normal income tax rate, and by saving money on taxes, you'll save so much money from your income and on your dividend income alone, which is why I really like to invest in dividend-paying stocks because you can save money on taxes with the dividend income as well. There are so many reasons why people invest in dividend stocks. But the 3 I mentioned today are that they reduce risk and volatility, they provide a steady and consistent stream of income, and because of the dividend tax rate, these are all great reasons why I invest in dividend stocks and why really anyone could benefit from investing in these types of stocks. Anyways, I hope you guys enjoyed today's video. Thank you so much for watching. And if you haven't done so already, please like the video down below and subscribe to my channel. Also, a quick reminder, if you would like to start investing and you don't have any investing brokerage account, use the link for Webull and get 2 free stocks valued up to $1,400. If you'd like to use Robinhood, you can use the link below and get 1 free stock. Or you can download Acorns and get $5 invested into your account. I post a minimum of 3 times a week on this channel. Thank you so much for watching, and as always, until next time.